Today. Plans include $5 credit for auto pay and e-billing. Taxes, fees, and other third-party charges will apply. See website for additional details.
Did you know that 55% of working Americans would choose a lower-paying job to work under a leader who inspires their brilliance? In today's fast-paced world, resilience isn't just a trait, it's a superpower. If you're feeling overwhelmed by life's pace with hurry and worry, struggling to find a way, discover the secrets with Simon T. Bailey's bestseller, Resilience at Work: How to Coach Yourself into a Thriving Future. Get your copy today on Amazon and unlock your full potential.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off a new week here, Chuck, Mike, and Tucker with you. Last day of March and last day of Q1 today, and not off to a particularly good start in markets with a negative open on all of the major U.S. indices. And this, I think you can draw a straight line to over the weekend. A bunch of noise coming out of D.C. about the potential for additional tariff implementations on Wednesday. We still don't know the specifics of exactly what is going to be implemented, but I was thinking on the way into the office this morning, what's the framework that we should be trying to view this through, and ultimately I keep coming back to one thing, which is stop getting caught up in the headlines that shift from day to day and week to week. Last Sunday, there was the big Wall Street Journal headline, hey, Trump administration planning, smaller tariffs than previously expected and no tariffs on sectors. In the last 5 days now, it's been, we're going to get auto tariffs and the tariffs might be bigger than expected. Now, I don't know much.
And by the way, on the day of the announcement of the auto tariffs, I believe President Trump also stated that the reciprocal tariffs were not going to be as wide-sweeping or impactful as people were thinking. And then again, reversing course over the weekend. So, yes, I'm with you.
So you can't have the tariffs be all of these things at once. They can't be not sector-related and on autos, and they can't be narrower and then more broad. Those are fundamentally impossible. Right. So I think, quite honestly, the best way to look at this is stop thinking about this in terms of the headlines and trying to figure out policy certainty from the headlines. Because you're not going to be able to. And it's going to cause you a whole bunch of angst and Tony Romo screaming inside of your head. It's just not worth it. And don't spend your time doing that. Instead, the very simple framework, and we've talked about this since the election back in November, by the way, is the Trump administration wants to impose tariffs. They've said that multiple times in multiple different venues with multiple people from the administration. As such, we should believe them when they say they want to, and the specifics we'll know when it's time when they're actually implemented. Beyond that, I think it's a waste of time to try to figure out, what's it going to be on what day and how much they want to impose tariffs. The amount has yet to be determined. How long they stay in place, yet to be determined. And you're just going to have to take it as it comes.
Yeah. I think the lesson that some people are learning right now is, and for good reason, in the first Trump administration, I think the takeaway for a lot of investors was take the president seriously, but not literally. And many have carried that forward to the second Trump administration and are being met with quite a surprise.
I don't even know if it's that. I think for whatever reason, and by the way, I do like to toot our own horn on this. Shortly after the election, we were talking, multiple times. I'm sure that if you wanted to listen to all of our old shows from November, December, you'd be able to find this stuff. We said, look, this is a different setup than the Trump administration was coming into during the first term. And they're talking about it differently.
And there's different people in place. Like
As
all
such,
of those things.
To simply expect, hey, we're going to get tax cuts and everything's off to the races, we said that was not necessarily what you are going to get. And there was the potential for much more chop and a much more challenging market environment than what you saw during the first Trump term. And thus far, that's been borne out. I mean, the S&P 500, if you look at it right now, look at all the major indices at the moment, the Dow is currently off 2.79% year to date. S&P's off 6.25%, Nasdaq's off 12.25%, Russell 2000 through Friday off 9.25%, just because the Russell, I don't know what it is with the Russell and its composition, but you never get intraday updates in any data feed the way that you're supposed to, so that's from Friday. But this is not something that you saw during year one of Trump 1.0. It was straight up because it was, hey, cut taxes and the economy's off to the races because you needed, there was room for more demand in the economy, and that was the playbook. This, we said, was a different economy that required a different playbook. The one that they've chosen is moving towards, more tariffs and those types of things. And so we're going to have to see what the impact on the economy ends up looking like. But thus far, markets are starting to, and I say starting because it's still really early and they're not really pricing in a ton, quite honestly, but markets are starting to price in the fact that this could be a growth negative policy that ends up slowing U.S. growth significantly over the course of this year.
I was having a conversation with a client of mine the other day about this, who's right on the verge of retirement, and I'm not giving out too much information. He's a Trump supporter. He is a conservative Trump supporter, voted for him twice, and likes the policy of the Trump administration. His assessment of this was, I think, one of the more clear ones that I've gotten from somebody, which is, this all might be really bad for me. And like my portfolio long-term could lose a lot of money because of this. And he wasn't certain about any of that, but he was looking at this and just saying, like, I think that this might happen. I think that it might result in inflation. I think based on the fact that I live here in the Northeast, I'm not going to see a ton of new jobs come to here. But I fundamentally believe that this will make my grandchildren's lives better. And it might literally take the rest of my life to see that come to fruition. Sure. And that was his assessment. And I thought that that was a really honest one. And then he also said, hey, I was talking to somebody else at work who is also a Trump supporter, and he was still fascinated by the idea that the IRS was going to get dissolved and he was never going to pay income taxes again. And I was like, and he was teasing that point of view as like, that's ludicrous and never going to happen. And I have to agree with his assessment. Like, if this stuff works, it will not be overnight. And I think the Trump administration has started to be really clear about that this is something that is going to take a long time and quite possibly a lot of pain to get through. And markets are, I think, finally now starting to take that seriously, although, again, we are still 10% away from all-time highs ever right now. So I don't want to overstate the depths of this downturn in equity markets.
So let's take a quick break here. When we come back, let's talk about, again, kind of what is slated to happen this week, because there's been a lot of chatter. We'll give the specifics that we have at the moment, and then talk about what we're seeing as far as, hey, how are economists looking at this in terms of the projected impact to the U.S. economy. That is coming up right after this.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K is Saturday, November 8th, and registration is now open. The race has sold out each of the past 4 years, and slots will fill up quickly. So don't delay. Visit dav5k.boston today and reserve your spot
or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston.
So, in terms of what is on the table for this week, April 2nd, we have the, reciprocal tariffs that the Trump administration has teased for kind of the last couple months now. We still don't know what format those are going to take. We don't know how long they're going to stick. We don't know if it's going to be a blanket rate across all of them, several different rates, or a customized one for any of the countries included.
I'm still waiting to hear if he's going to delay that because of my birthday or not. I submitted a request, but I don't know if it got heard.
Probably not.
Yeah.
There's already a one day. To be fair, originally these were talked about going into place on April 1st, but the Trump administration was actually nervous people would think they were an April Fool's joke, and so that's why they pushed them to April 2nd.
That's fair.
So there's that. So you've got those. Again, a lot of questions. Still don't know the exact format they'll take. April 3rd, on Thursday, the auto tariffs on all U.S. auto imports are stated to go into effect, with that being just on completed vehicles. Auto parts not included there until May.
Yeah, I don't know that we got to find. Yeah, okay, it was May, right? Was the final
beginning
implementation
of May
date? Okay,
on
the parts, and again, the parts being a really important component here because I do not believe that even Tesla uses more than 50% parts sourced in the
Tesla's
US.
about 80%.
80% sourced in the U.S.
Yes.
Okay, my apologies.
I believe it's the highest out of any U.S. automaker, but still not 100%.
Right.
So, in terms of what we are seeing now as far as projections, and I want to talk about the fine folks at Goldman Sachs, who, quite honestly, I give them a lot of crap normally. I've repeatedly referenced how, Matt Taibbi referred to them as a vampire squid with its tentacles around, American society.
Indeed.
Like, we talk about how, hey, they tell you one thing publicly and then, give the real stuff, internally, blah, blah, blah. Here's what I will say about Goldman Sachs. Whoever their publicly facing GDP research team is, they have been so plugged in the last 2 years that they've done a really, really good job. And again, longtime listeners know I don't really like to compliment Goldman Sachs. It gives me a weird feeling in the pit of my stomach. It does. But I give credit where credit's due, because for the last 2 years, every time the recessionary concerns have come up, Goldman's been there and they've been like, no, we're looking through this. We don't think there's a recession coming. And they've been right every time on exactly what's happened.
And there's been a few of those, right? Summer of 2024.
There have been three different ones. There was Silicon Valley Bank where people panicked, and Goldman was like...
April of 23?
Yeah, and Goldman was like, don't even worry about this. This is a nothing burger. Then summer of 23, we were heading towards the fall and wondering, gee, is the labor market slowing? And Goldman once again was like, no, this isn't a thing. Don't worry about it. And then last summer, same situation, heading towards the end of the year.
Yeah, we had a Somme rule recession indicator.
Jeremy Siegel's on CNBC or Bloomberg screaming that we need 150 basis points in rate cuts that week. And Goldman Sachs is like, please, Jeremy, don't say that. And said, no, this is not a thing. So I do pay attention to what their GDP research team says, because they've been really plugged into this market for the last couple of years now. And so... couple things that they did over the weekend. Again, I guess they work long hours there because this came out over the weekend. First, their Q1 growth rate, they have downgraded 4 times in the last week and a half now. And it's been, unfortunately, consistently moving in one direction from them. You look at kind of where they started, and they were like, yeah, we're at 1.8%. Then 1.6, then 1.3, then 1, then 0.6, then 0.2%. So they now think Q1 GDP growth is going to be 0.2%. They think you're going to get a little bit of a bounce back in Q2. We talked about this last week.
Sure.
Weather factors, consumer spending. So they think Q2 is going to come in at 1.5, Q3 at 1, and Q4 at 1.3. Overall, they think GDP growth is going to come in at 1% full year, which is
light
and below trend. Trend GDP in the U.S., given, where population growth is and things like that, is in the high ones. 1.7 to 2.1% is kind of where you would expect it to be. So 1 is light. You kind of look at it, you're like, okay, that's not great. The other thing they did, which I don't think really has a ton of value in and of itself, is they raised their probability of recession in the U.S. from 20% to 35%. And the reason why I say like this doesn't have much value is, like, what does that fundamentally mean that there's a 20% versus a 35% chance of recession? I know that from a technical perspective, it means, hey, we now think that recession is 1.75 times as likely as we did, but
yeah, there's a 1 in 3 chance that we think that our GDP projections are a lot worse than we're stating.
Recession's binary. You can't have a third of a recession. Like, it doesn't work like that. And so the signal that I do think is interesting here is that when you look at Goldman and how they have changed their recession odds historically in the last few years, they are saying, hey, this is what we think is the highest likelihood of recession that we've seen in the last several years. So I get some signal from that in terms of relative probabilities, not so much, hey, here's what this means in absolute terms, because I don't know what one does with a 35% chance of recession.
Yeah, it's only useful if you're able to get, like, hey, the running average from Goldman Sachs over the last 30 years in terms of their recession probabilities was 10%, and now they're at 35%. That gives you some relative area. But I feel like generally from economists, their baseline is like a 1 in 5 chance of recession. And so 35% is certainly elevated. I just don't know how elevated it is.
But again, we even saw the stuff back at the end of 2022. We had Bloomberg saying there was a 100% chance of recession in the next 12 months. You had Jamie Dimon then being like, hey, you know, there's a hurricane coming. Yep. And so I think you got to take all of this with a grain of salt. But I do pay attention to Goldman's GDP research team just because they've been right on the ball for the last 2 years. And that to me is something where, hey, you got to understand, it's no different from watching March Madness, what we're seeing right now, which it's March, like, isn't it? You watch a game, and it's of a team that you have no idea who they are. Like, you watch a first-round game, and you've got, I don't know, who was a big first-round upset this year, Tucker? McNeese. You're watching McNeese. The first 10 minutes of the McNeese game, you're watching them play Clemson, and you're like,
where the hell's McNeese?
You're saying that first. But, like, anytime a McNeese shooter gets the ball, you don't really know if you want them to shoot or not because you don't know if they're any good at it. By the time you've watched the end of that game, by the second round game, you got, you know, whoever it is from McNeese, and you're going, no, don't shoot it, because, like, you understand the context of it. You're like, no, get it to the shooter, get it to the open guy. It's the same thing when you're looking at GDP forecasting and really anything economics related, in that, hey, if you just look at these in a vacuum, like, you have no idea if this means anything. But I do know that Goldman's GDP team has been on a heater for the last 2 years. And so given that, I put a little bit more weight internally, you know, in my own, like, thought process as to, hey, what are they saying right now, as opposed to, okay, Bill Gross came out with something, guy hasn't been hot for 2 decades, like, what are we doing here?
Yeah, and I think, again, Goldman does not, they don't lick their finger and stick it up in the air to try and determine where recession is.
Well, they do that, but
it's a bit more technical. And this does, I think, you know, regardless of your perspective on tariffs, we have some pretty compelling evidence that consumers dramatically slowed down spending, not spent down slowing. That would be a different thing. In January and February of this year, we've taken that to say, look, you know, if that continues, it's a pretty clear recession. But there was other stuff going on back in January and February besides tariff talk and government job cuts. And so you could take that to mean, A, hey, it's going to get a lot worse because now people are worried about job cuts, recession, market sell-off, etc. Or you could take it to mean, hey, this could get a lot better because people were horribly sick and dealing with wildfires in January and February. But the risk is certainly higher because the slowdown in spending already started.
And here's the thing. If this is going to come, if you think recession is going to come to fruition, you're likely going to see the signs of it starting in the next few months. Because otherwise, here's what happens. Here's the path to no recession. You got everyone all negative sentimentally right now, or sentimentality. There's a lot of negative sentiment out there.
Feel bad.
There's a lot of negative sentiment out there. If the economic data comes in better than people expect the next couple months, then both businesses and households start to say, gee, maybe there's no recession on the horizon. We start spending more and growth comes out of it. Otherwise, you go the other way. But this is why the next few months, Q2, it's a big one here. It's a big one to see where this puppy goes. Let's take a quick break. We got Wall Street Watch next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, on the final trading day of a rocky first quarter, markets today are extending their losses as investors closely monitor developments on the tariff front ahead of this week's deadline. At the moment, the Dow is down by 83 points, or 0.2%. S&P 500 down about 0.8%, or 44 points. And the NASDAQ selling off by over 1.75%, or 314 points. Russell 2000 is down 1.2%. 10-year Treasury yield down by 3 basis points at 4.21%, and crude oil up about 2% higher, trading just below $71 a barrel. Auto stocks continue to garner attention ahead of the implementation of President Trump's tariffs on imported autos set to take place this week. General Motors down by 0.33%, Ford up by 1.5%, and Stellantis shares are down about 2.5%. Sticking with auto, Tesla down by 7% after Stifel cut its price target of the stock, where the firm said that a slower than expected rollout of Tesla's new Model Y and recent protests could weigh on sales in the near term. Meanwhile, after its disappointing IPO on Friday, shares in CoreWeave down by 8% today. Nvidia, who backs the cloud provider startup, is also seeing a loss of about 5% today. Elsewhere, Rocket Companies announced a definitive agreement to acquire mortgage firm Mr. Cooper in an all-stock transaction for $9.4 billion. Shares of Mr. Cooper up by 16%, while Rocket stock is down by 8%. Vaccine makers Moderna and Novavax down by 12% and 7% respectively after the Wall Street Journal reported on Friday that the FDA's top vaccine official has been pushed out, and more volatility for Palantir, where shares in the AI and defense tech company are down 4% today. Last week, the stock fell more than 5%. I'm Tucker Silva, and that's Wall Street Watch.
So let's talk a little bit about CoreWeave. They were the company that IPO'd on Friday. They are basically the long and short of them. They buy a bunch of chips from Nvidia. They've got about 250,000 that they bought. They set up these big AI server farms, and then they lease the space out and the computing power out to companies that want the computing power for AI. Microsoft is their biggest customer at about 62% of their revenue last year.
They kind of came out of nowhere here. They were previously setting up mining centers to do crypto mining, so they had data centers being established across the country, and then quickly pivoted when they realized, oh yeah, companies are more than willing to lease these same data centers out at a significantly higher price than we're able to make mining Ethereum, for example, to run AI models and scale things up rather rapidly. I have to say that I don't really understand why this would be more attractive for a Microsoft. Well, obviously Microsoft's not going to go to Amazon to lease this type of stuff, but I don't fully understand why they just don't do it on their own. But in any case, yes, you've grown your revenue massively, and Microsoft is your biggest customer. So you've got big customers growing rapidly.
So they went through an IPO on Friday, which can quite honestly, you know that we're not really prone to hyperbole on this show, but it can generously be described as a train wreck. That, by the way, Morgan Stanley, who was the lead underwriter on this, I want to get into just a little bit about how IPOs work, just because
I was going to say we should probably start there.
I think there's some meat here. So company CoreWeave comes out and says, hey, we want to go public and we want to raise X number of dollars in going public. And they go and shop around to different banks. And the banks, basically, their job is to do two things. Their job is to figure out how much demand there is for shares of the company and then price it appropriately so that there's a big pop shortly after the shares go public, because that's what maintains it's basically covering two things. You're helping the company to accomplish their financing needs and liquidity for, their investors. And you're also helping your own bank being able to say, hey, here's, what we were able to give our clients in terms of the pop later on. And it helps to maintain demand for future IPOs by that same bank.
Because that's the whole idea is, hey, if you are a customer of that bank, you can go in and participate in that IPO.
And usually
get
big
the price,
customers.
And you're a big customer there, a strategic customer there. You get to buy your allotment of shares. And if your average experience is that the day that it goes public, you get a big pop in the value of your shares, not only do you make some money, but you have something fun to talk about on the golf course.
So, obviously, this has been kind of a negative market to start the year. First quarter has not gone how, you would like to see it, with all the major indices in the U.S. in negative territory. So you got CoreWeave, who wants to go through this IPO. They need to, and they decide, okay, we're going to go with Morgan Stanley as the underwriter on this. And Morgan Stanley's tech desk is basically considered the gold standard of underwriting for tech IPOs. Like they are the company that you go to in order to do a big tech IPO. And pretty much what was going on is during, the IPO roadshow, where they go around and they, CoreWeave's CEO and CFO and everyone, they're all going around to, different parts of the country and pitching, local branches on the IPO so that they can sell it to their clients. They were saying, okay, we want to raise $2.5 billion. And that's going to be somewhere between, I think it was like $50 and $57 a share is like what it ended up, what they were saying. And late last week, it's like, hey, the demand isn't really there, and so we're going to downsize the IPO. And they end up downsizing the issuance size by like almost 30%. They downsized the price by 20% from $50 a share down to $40. And Morgan Stanley, again, I got to give them credit on this. CoreWeave closed on Friday at $40 a share. And Morgan Stanley's brokers were working overtime to be like, that thing is not going to trade under 40 at the close because it would look bad for us. And again, the job of the underwriter is not to, make the stock a lot of money once it's public, but it's basically to say, hey, did we fairly price this stock? And this is a tough market to do this in. Again, you had, a market sell-off going on Friday. You got a lot of uncertainty. And so the work that Morgan Stanley did, I actually kind of commend them, because it was like, this was a tough one to be able to pull off in this environment. Having said that, the actual IPO, the reason I describe it as a train wreck is because, look, when you have to downsize your IPO by 45%, and then Nvidia, who is CoreWeave's biggest vendor, CoreWeave has bought all of these chips from Nvidia, meaning they've sent them billions of dollars.
Borrowed a ton of money to do so.
Nvidia says on Thursday night, hey, we're going to take $250 million and put it into your IPO, because otherwise your IPO is not going off successfully. So it's just, okay, so CoreWeave paid Nvidia a bunch of money. Nvidia's paying it back to CoreWeave. Like, we see what's going on here. Today, the shares are down almost 10%. It's trading at $36 and change right now. And there's a story in CNBC talking about, look, CoreWeave was this company that was doing all this crypto stuff, and Nvidia helped them, pivot to AI. And the piece that I keep coming back to on AI that's really interesting to me is, hey, what if AI actually is, pretty useful and deflationary in some respects? Not to the scale that, some of the stuff being claimed is, where it's like, hey, all of our doctors are going to be AI in 10 years. But what if it just helps doctors to be much more productive, and it helps writers to be much more productive, and it helps, wealth managers to be more whatever, just, white collar workers who can be more productive using generative AI. I can buy that story. But ultimately, isn't it also kind of commoditized in that a lot of that work, you don't need to be on any one particular platform to do? And it's not like Microsoft Word, where it needs to like ship with the operating system and stuff like that. These are all web-based apps. And so what if it's, meaningfully deflationary, but also there's no margins and no profit in it in the long run? Because it's basically just, hey, build all this stuff and then sell it as cheaply as possible, which is kind of how it usually is in the computer space.
I was going to say, kind of like the internet.
Yeah. Well, here's the thing. There's some companies in the internet that do make a lot of money. I mean, Google does. But
the core providers of the internet
did not.
I mean, think about the core providers of the internet today, or what they were back then, right? AOL, Time Warner, Verizon, Comcast. These are big. I'm not saying these are big, unprofitable companies. That's not it at all. But they are certainly not large contributors to growth.
And even on the companies that do make money on the internet, do most internet-based companies, do they make money? Do they make their money selling a bunch of stuff on the internet?
No.
What do they sell?
The bandwidth.
Ads.
Yeah.
They sell advertising. Like
Sure.
Google.
The companies that make a bunch of money on the internet.
Right. You look at the companies that have made a bunch. Google, Meta. It's not like Meta sits there and is like, hey, we sold a bunch of stuff to people. No. Meta makes their money by selling a bunch of ads. And so if you're no longer in the business of selling ads, but now you're selling services, isn't it a race to the bottom on something like this that's, increasingly commoditized and that people still don't want to pay for because they're used to how the internet works? When you go online, Mike, how often do you pay for accessing a part of the internet?
Rarely.
You don't.
I mean, occasionally for a newspaper publication or a TV subscription, but by and large, no.
TV subscription isn't accessing the internet. It's just where we when you're going around browsing the internet. Right. How often do you pay for something?
Rarely.
And so if the default use of most users is I don't want to pay for the internet, how are you going to get money in that? Where's it going to come from?
Yeah. That said, I don't know that that's what's caused the IPO to go off so horribly on this week. I don't think that there is that fully thought out process, but it's an interesting question.
I think it's something that we're starting to see given, Microsoft last week saying that, or I don't know if they said it or if it was just, someone found out that, hey, they're canceling a couple of their data centers that they were previously building. You got this IPO that's going off badly. There's something that's a little bit, stinky there. I won't say rotten, just because, again, these companies are all making boatloads of money still. Nvidia still is hugely profitable. Microsoft is Microsoft. Sure. There's a way to say, hey, the bloom is off the rose without it being the end of the world. And that could just be what this is. It's okay, sure, Cisco and Intel are still here from the original tech bubble, but they're not what people thought they were going to be. We've still had huge advances, and if you look at what we're doing technologically now compared to 25 years ago, it's night and day. But ultimately, those technologies were really deflationary, and they helped to lower costs while ultimately not generating a ton of profit for the companies that people thought would be hugely profitable. Maybe that's where we're going with this round, and that could be just fine for all of us, but maybe it's not great for the margins and profits of these companies in the long run. I don't know. We'll have to see. Let's take a quick break here. When we come back, let's see. Yeah, when we come back, we're going to be joined by Todd Lutzke from the law firm of Cushing & Dolan right after this.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
All right, as promised, we are now joined by the one and only Todd Lutzke from the law firm of Cushing & Dolan. Mr. Lutzke, how are you?
I am never better, and you?
Doing great here. Todd, if someone has a life estate, if their primary residence is in a life estate, does that mean that they are protected against creditor claims from a long-term care situation?
It does, but of course, nothing is that easy. So while this may be one benefit, the first issue you have is the moment you set it up, you make, if the life estate is in the hands of the children, and the life estate is in your hands, and you gave the remainder interest to the children, you've made a completed gift, which you need to address. So it's make sure you handle filing any gift tax returns that are needed to be done. And also, of course, it takes 5 years, right? You got to wait the 5 years in order to get there. But ultimately, at the end of the day, after 5 years, it will be protected from the nursing home, and you would get a step up in basis. So those are the two benefits, perhaps, of it. But please look into it because there's a lot more negatives, I think, than there are benefits.
What about the use of an irrevocable trust there? Does that take away some of those negatives that a life estate may possess?
I think it takes away pretty much all of them, actually. So I guess there's a right way and a wrong way to do a life estate, folks. I think the better way, if we're going to do it, which also is only done perhaps by us by maybe 3 different times, but when we do life estates for people, we always do them with the remainder interest in the hands of an irrevocable trust versus in the hands of the children. For The biggest reasons are, one, you keep control over the house. You can sell it. You can move. You can control the money. You can buy another house. You can change your beneficiaries. Can't do, it's so much harder to do that when it's in the hands of the children, because you need their permission. You need to deal with their signatures. And of course, there's a huge allocation of the proceeds that go to them. And then you don't have as many of the proceeds as you might need as the life tenant to buy your next house or move. So there are plenty of negatives that go with it and positives. But folks, if you're thinking about getting a life estate or you have one, get the guide. It's the end of the month. The guide will help you understand what it is you actually have, because you may not fully understand what's included or not included in the life estate. And if you're thinking of getting one, before you get one, get the guide and say, yeah, it seems like a shortcut, but maybe there are negatives associated with a life estate arrangement that I wouldn't like, and you can figure out which one is right for you. So call and get the guide, Calculating the Consequences of a Life Estate. It is the end of the month and is going away, folks. 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Bye, Todd.
Thank you.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Just had a funny snafu here in the studio here, which is always entertaining.
It's fine. So, New York Times, 80,000 pounds of beef stolen from Tennessee slaughterhouse.
I mean, this is only second to the
I didn't mean to take all of it.
Famous egg heist of February of this year, when approximately 100,000 organic eggs were stolen from Greencastle, Pennsylvania. The eggs, at least, will last a little while. What are you going to do with 80,000 pounds of beef?
If you dry age it, that'll give you some time at least.
Yeah, I suppose you could dry age it.
Other things that I find funny about this, again, there's nothing really funny about 80,000 pounds being stolen from a slaughterhouse other than 80,000 pounds of beef being stolen from a slaughterhouse. But the second sentence here.
Yeah, that's the best part.
They can't figure out where the beef is, but a fake trucking company made off with enough meat to make about 320,000 quarter pounders. So,
wow, you can multiply by 4?
Did you really have to figure out that there's a quarter pound of beef in every quarter pounder, and there's 4 quarters in a pound, and thus, hey, this is how many quarter pounders you could make?
This was purely the New York Times tossing something to ChatGPT or whatever they use and saying, hey, I need another few pages of filler here. What you got?
The shipments valued at $350,000 remained missing as of Friday.
Headline should have been, "Where's the beef?" Sorry, dropped the ball.
True.
I bet the Post had that. The Post probably had that.
Yeah, it's a layup.
Let's take a quick break here. Hour 2 coming up in just a little bit.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically, you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hour 2 here on the Financial Exchange. Chuck, Mike, and Tucker with you. And we got 1 out of 3 major U.S. indices now in positive territory. The Dow Jones Industrial Average now up 34 points after being down almost 300 points at one point today. NASDAQ down about 40 points after being down 80 plus at one point. And the NASDAQ still struggling to get off the mat, down 305 points, or about 1.76%, as big tech is what is being hit hardest today. 10-year U.S. Treasury down 3 basis points to 4.224%, so continuing last couple days of bond buying moving in that direction. We've got oil up $1.62 a barrel to $70.98. The AAA national average for gas prices continuing to rise as well, up another 0.9 of a cent to 3.16 0.8. Most of this still to this point due to the switch from the winter blends over to the summer blends at refiners. But if we do get oil prices hanging out and moving back up into the 70s consistently, that could put a little bit of pressure on gas prices as well. Finally, we've got gold up another $41.30 an ounce to $31.55 a new all-time high for gold yet again as it continues on its recent tear here. And so you've got the yellow metal just chugging right along with not a care in sight to this point in the year at least.
Tucker, where were our mortgage rate predictions for the year? We had that Post-it note out there for the year, right? According to Mortgage News Daily, we're sitting at 6.76% as of yesterday on that, or as of Friday rather, on that 30-year fixed. I'd imagine with...
Did we do predictions on that?
I think we did.
No, sure.
Yeah, I think we did.
All right, so this was back in December, early December. Paul had low fixed mortgage rate at 5.85, high is 7.1. Chuck had 5.2, high 7.8. Mike had
I had a really
6.5. No, Mike said high is now. I don't know why it says that. And then low is 6.5.
You thought that rates were only going to go down from then?
Within a half a percentage point.
Yeah, it's fine. You know, stick to your convictions.
Yeah, that might not work out so well. For those that are trying to interpret this market, I mean, you've got the Dow up and the NASDAQ off 1.7% here, Chuck. And I think drawing the connection there between, okay, tariff uncertainty and tech sell-off, are they related? Is this a contributing factor? And then broad-based sell-off. I mean, one thing that I think is worth noting, the S&P 500 is about a third of that comprised of technology stocks, specifically the tech sector. And that doesn't even include companies like Amazon, Meta, Google, who are not classified as tech stocks.
Sure.
But about a third of the overall sector is considered to be in the information technology sector. Back in 99, that was like 20%. So where tech goes today is where the overall market goes. But trying to make that connection here, right? Like tariff uncertainty, NASDAQ sell-off. Are we purely just talking about a valuation story here, or is there some direct one-to-one connection that I'm not really piecing together properly? Because when I think about companies today affected by tariffs, automakers and industrial companies in the short term seem like the main drawbacks.
Yeah, you're not really sitting there being like, oh, gee, like, you know, Microsoft is going to be a company majorly impacted by tariffs. So a couple different ways that you can look at this, just in terms of, hey, could these be? I'm not saying that these things are true. I'm just, going through things in my head. The first is, Mike, do you know how much stuff the U.S. exports to the EU?
No.
Tucker, do you know how much stuff the U.S. exports to the EU?
No.
Okay. I'll tell you how much the U.S. exports to the EU.
More than a boatload.
$370 billion in goods and about $430 billion in services. A total of about $800 billion.
So give me would a Meta be selling an ad in Europe?
That's a service.
Yes,
it's not a good.
Yeah.
Microsoft selling AI. Service, not good.
Yep.
Ford selling a car, good, not service.
Yep.
We could do this all day if we wanted to.
Yep.
It would be kind of a really boring game.
Yep.
The U.S. imports about $800 billion in stuff. I'm sorry, $900 billion in stuff from the EU. $600 billion of that is stuff. $300 billion of it is services. So overall, the U.S. has about a $100 billion trade gap. The gap in goods is $235 billion, but the gap when you include services narrows. Now, Mike, let me ask you a question. If Mercedes-Benz is exporting a car to the United States, what do you think the margins are on that?
10%?
It's in that ballpark. Okay, so, and again, it depends on, it's 8.82 right now, but it's generally around 10%. When Microsoft exports AI services to Europe.
Heck of a lot higher.
What do you think the margins are on it?
Triple it.
We don't know, but probably triple to quadruple.
38.
So, somewhere in that ballpark. Okay. Again, if you just look at Microsoft overall, they have 45% margins. I'm going to assume whatever they're exporting to Europe is probably in that same ballpark.
Sure.
So here's the one potential way that I try to resolve this is, if the U.S. imposes tariffs on European exports of goods that are low margin, the response from Europe, yes, they can target goods, but they could also say, no, we're going to target services. Like they could very easily do that. And so potentially then it makes it more challenging for U.S. tech companies to sell into Europe, because that's where the pain is for the U.S. I mean, here's the thing. You got $430 billion of high-margin services stuff that you're exporting to Europe. that is potentially at risk because of a $100 billion overall trade gap of much lower margin stuff.
Right.
And so there's some potential asymmetric pain. Is that what's causing this? Heck if I know. I never try to ascribe too much meaning to any one particular market move because you never really know. There's millions of market participants. They all have their own different things that they're doing here. Other things that this could be. Mike, when we look at, and this doesn't get talked about a whole lot, but the idea of capital flows and how money moves back and forth across borders. This is kind of a big thing as well. And part of me looks at this and says, okay, European investors have been buying up a bunch of U.S. stuff over the last couple of years, a bunch of U.S. stocks more specifically. And the reason why is, hey, regardless of where you were, if you were an investor that wasn't long Mag 7 for 2023 and the first half of 2024,
it's pretty ugly for you.
You know what was getting handed to you? Your hat. Your hat was getting handed to you because
often
everything
your time's
else
your
was
job.
losing.
Yeah.
And so you had institutional investors in Europe saying, gee, we got to get long Mag 7. We got to get long Mag 7. Now you look at this year, okay, and I'll quote here. This is from the Financial Times because they put out a story this weekend. It's titled The Great European Disentanglement from U.S. Stocks Has Only Started. I'll quote, European investors had about $9 trillion in U.S. stocks at the end of last year, around 17% of the overall value of the U.S. market. So here's the big thing. The stuff that they were buying, like they weren't coming out and just being like, yes, let's buy the S&P 500. No, they were trying to buy like the best stuff in the U.S. for the last couple of years. So ultimately what this means based on the relative sizes of U.S. and European markets is if you have European investors who say, look, we're nervous about how all this is going to go down. We don't know how the taxation is going to work. We're worried about being cut off from our capital, this and that. Hey, let's pull some of this money back from U.S. equity investments and put it back into European ones. Based on the relative sizes, even if Europeans just sell 10% of their equity exposure, it ends up being around 1 2/3% of the U.S. market, but it's 10% of the entire European market then. So you got these capital flows that come back then. So maybe that's some of it, is all the money from overseas that piled into Mag 7 the last couple of years
comes back out.
Could be heading back home. And this also kind of jives with the fact that European equities have outperformed U.S. ones pretty significantly this year. So now, if you're sitting there and you're like, okay, so I'm taking this currency risk of, holding stuff overseas in dollars. I got questions about, tax rates and this and that. No, just pull it back and I can have all those questions answered. Maybe some of that's going on. So it's not to say that any of it is. This could all just be people are nervous about AI and that's what's driving this. But there are a couple plausible stories as to why tariffs could impact these, on an outsized basis. Does it make sense for all of this? Not really. I mean, like you look at some other things that are going on today and you're like, okay, if this is the case, why is, IBM up 3%? Like they sell a bunch of stuff to Europe too. So it's not just that. Why is Apple up almost 1% today? They sell iPhones in Europe, so I don't think that what's going on today is mostly related to tariffs, which is, I got to say, kind of remarkable that we're 2 days out from potentially the largest tariff implementation in the U.S. in the last 90 years, and markets are still kind of just like, we might pay attention, we might not.
Yeah, to be clear, are we even off 10% now? With the S&P down only 0.75%.
Mike, right now there are 80 more S&P 500 stocks that are up than down on the day.
Yeah.
I know the index is down 0.2% because of, again, Mag 7 being off. But right now, there are more S&P 500 stocks up than down. And it's not like it's just close. It's 80 more. So I still don't get the sense that markets are really pricing in the tariff thing. It's just AI's had a bad couple days with the CoreWeave IPO and now this, where it's kind of like, the blooms off the AI rose, I think, is more what we're seeing now. And on the tariff side, we'll see what we get. I think markets might still be looking for kind of what we got with Canada and Mexico at the beginning of the month, which is tariffs are imposed for, a day or two, and then most of them retracted. And it feels like that's kind of what markets are looking at right now. I don't know.
Yeah.
Let's take a quick break here. When we come back, we've got trivia right after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bend you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
All right, time for trivia on the Financial Exchange. Today is Christopher Walken's 82nd birthday. Walken began his career in entertainment as a child actor in the 1950s. As a teenager, Walken took a job with the circus before he returned to acting as a late teenager. trivia question today. What was Christopher Walken's job when he was in the circus? Once again, what was Christopher Walken's job when he was in the circus? Be the second person today to text us at 617. What? What are you saying?
Nothing.
Oh, I thought you were talking to me. Sorry. Be the, what did I say? Second person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the second correct response to text us at 617-362-1385. We'll get that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, we do have a little bit of movement continuing to the upside on oil prices here. And it's more than a little that we're seeing right now, actually. You got West Texas Intermediate up $1.69 a barrel now to $71.05. And
I just find it interesting because most of the last 30 days in trading has played out like a pretty clear recession trade. Gold up, bond yields down, oil down, stocks down. This is a reversal, right? You've got the U.S. equity market off by, now it's a lot less. S&P is now off by like 0.5%, and so maybe that's all it is just a rebound there. But to see oil spiking, it's not spiking, but up to over 2% is just interesting to me when I don't see a whole lot of OPEC or other news on the subject.
No, I'm going through just trying to see if I see anything notable at the moment. I mean, there's been like some rumblings about Iran the last couple days, but I haven't seen anything new this morning, so I can't make heads or tails of it. But
sometimes price moves are just price moves, but caught my eye as different from what we've seen for the last several weeks.
It's not usually in energy. Usually something's up, like there's usually something going on here.
Right.
Again, maybe it's the Iran chatter from the last couple days, but I can't make heads or tails of it aside from that.
Reasonable.
Who knows? Let's see. Do we want to do how to prepare your portfolio for the next market mess?
Sure.
It's the title of the piece in the Wall Street Journal. And I'll quote here. What happens if it all goes wrong? Okay, first, before we go further, in order to, define how to build the right kind of protection in a portfolio, you need to define what is going wrong. So you can't just say, like, if it all goes wrong, because honestly, if it all goes wrong, your portfolio doesn't matter. Like, let's just call a spade a spade. Like, if we end up in a Mad Max end of the world scenario, whether or not you held, like, this ETF or that mutual fund in your portfolio doesn't freaking matter. So stop worrying about that.
Yeah. Other things that I think people have confused or I think are worried about the wrong thing. So, for instance, you own a treasury bond, which is a loan to the United States government, and the worry of, well, what if they don't pay me back? And then, again, taking yourself down that logical path, then, I don't know, in my case, if the U.S. Treasury doesn't pay me back, then I'm suddenly
it's probably
pretty
just
sure...
not you that they're not paying back.
Right, they didn't single me out. It probably means that my bank account isn't useful because I don't have FDIC insurance anymore, and probably the brokerage firm in which I bought that Treasury bond ceases to exist in relatively short order. So, again, you got to define what you mean by a, quote, market mess.
Yes. So if it's, hey, I'm nervous about, a big drawdown in stocks, okay, there are things that you can do for that. Own fewer stocks being the simplest and easiest one of them. Now, does that mean like you sell everything, on a day like today just because the open was bad? Like, no, we've talked at length about how you don't want to make emotional decisions with your portfolio. Other things, hey, what if there's inflation and interest rates go way up? Okay, once again, there's ways that you can manage this stuff.
So, like, for example, I think a lesson people took from 2008 was, if I buy and hold long-term treasuries as a part of my investment portfolio, then I'll have an asset class that does something different when markets sell off. Because that was the experience in 08, right?
But not in 2022, then.
Equities sold off by 50%, and then bonds went up by 20% in some cases, depending on what you were owning.
Sure.
In 2022, they both lost 25 and 15% respectively. So these trends don't always hold true, and you have to understand which market mess scenario you're worried about.
And again, even before getting into like what should you do depending on the mess that you're worried about, you got to do a healthy chunk of asking yourself, hey, what if I'm wrong? because you're not going to be right about what happens in the investment world all the time. Anyone who says, hey, I'm always right with my investments, either they're lying to you or they've been invested for a day and a half. Because if you're in this game long enough, you've been wrong plenty of times.
The very best at this, the people that you read about in books in terms of investing, they're maybe right 55% of the time if they are amazing at this.
Yeah, what they're really good at is when they take risk, knowing how to size it and when to cut it so they're not taking big losses. Because look, there are 4 outcomes when you make an investment in anything. You can make a lot, make a little, or lose a lot. The entire ball game basically depends on staying out of that 4th category. If you lose a lot, you're kind of screwed.
It seems simple, but it's not always put this way.
No, like that's basically what it is. You can lose a little, that's fine. That happens to everyone. You can make a little, fine. Not everything has to be a 12-bagger. You can make a lot, great. Yahoo, celebrate your success. You can't get crushed by, different things that you do. And so having some humility so that you don't do that and go too far in the wrong direction, kind of a big thing. Let's take a quick break. When we come back, we got the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, trivia question today was, what was Christopher Walken's job when he was in the circus as a teenager? That'll be a lion tamer. Pete from Worcester, Mass. is our winner today, taking home a brand new Financial Exchange Show t-shirt. Congrats to Pete there. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Do you guys know that beyond that, he also trained as a dancer for a couple of years?
Fantastic dancer.
If you haven't seen the what is it, the Fatboy Slim video, Weapon of Choice?
Yeah, oh, tremendous.
Oh my goodness, just fantastic. It's just it's absolutely fantastic, and not what you would expect from him. But I digress. Let's see. We talking housing, Mike?
Yeah, let's talk housing.
Okay,
we're firmly in the spring housing market. Is that fair to say?
Yeah, like we're in it now for about a month, 2 months almost.
Yeah.
I generally say that the Super Bowl is now the start of the spring housing market with how things have moved. And a piece from Bloomberg Opinion is saying, look, you're going to have some bargains out there. Not everywhere, though. It's based on where the inventory is. And so, look, if you're looking in the Southeast, you're going to have some options available to you.
Yeah. So taking a look, I always love this tool, and Chuck has some other ones from Mike Simonson that are really useful. But taking a look at all active listings across the country, and then I look state by state. So this includes both single and multifamily. So keep in mind it might not be exactly what you are looking for. But in the state of Florida, for example, there are now 8.7% more homes for sale than there were in February of 2019.
Yep.
So, and by the way, all of my data is as of February of 2025.
Sure.
So, it's a month outdated, but it's pretty indicative. In Massachusetts, we are still less than half, 45.5% of February 19 levels. Connecticut, which remains just the absolute worst state in terms of home inventory compared to where they were before, 22%. Oregon, 84.5% for those listening out in Oregon today. New Hampshire, 39%. Rhode Island, 33%, Maine, 39%, Vermont, 32%, and then I included California as well, just because biggest state in the country, figured that might be helpful. 74% inventory levels compared to what I describe as more normal pre-COVID home environment. And so there might be some sales going on this year. They just won't be anywhere near the Northeast.
No, and so this is, again, depending on exactly where you may be interested in buying, there's some possibilities that you find some things, but also remember, it's cheap as a relative term.
Right.
You know,
nobody was describing the 2019 housing market as inexpensive.
These might be bargains relative to what they've been like recently, but some other data that we've gotten from Freddie Mac in terms of their housing price index and where prices have fallen. Again, this is just the biggest declines in metro areas in the country. Most of them are in Florida, by the way. The biggest one, Austin, Round Rock, Georgetown, Texas. That metro area down 13.5%. That's how far prices have fallen from the peak there. They still, though, again, if you look at it, they're still up meaningfully over 2019, 2018. Sure. Punta Gorda down 9.9%. Cape Coral, Fort Myers down 9.5%. Lake Charles, Louisiana down 7.1%. Homosassa Springs. I don't know where that is in Florida. You
couldn't even pronounce it.
Or maybe it's Homosassa. I think it's Homosassa, but it might be Homosassa. That kind of sounds more reasonable. They're down 6%. Northport, Sarasota, Bradenton down 4.9%. New Orleans down 3.9%.
Homosassa appears to be about an hour's north of Tampa.
There you go. Lakeland down 3.7%. Pensacola down 3.7%. Vero Beach down 3.5%. Dover, Delaware sneaking on here down 3.2% to round out the top 10. But the rest, it's a lot of Florida. A couple Californias start to sneak out there as well. But the places where prices are falling, again, it's dominated by Florida. Aside from that, you got some small pullbacks that are happening. It's hard for me to look at this and be like, yes, there are bargains, and much more, hey, maybe a little bit of the froth has come off here and there.
Yeah, seems that way. If you are, look, there's been a lot of reasons this year to be assessing and reassessing your own personal finances. And I know market sell-off is one of those key items, right? We all tie our wealth predominantly to two things: the value of our home equity and the value of our investment portfolio. And for better or for worse, you don't exactly get an update on the value of your home every single day. No. I think for the better.
And you probably shouldn't.
You do on your investment portfolio, and I know that that's caused a lot of consternation. It's the last day of the month. Armstrong Advisory Group has a brand new guide out this month on the role of a financial advisor, what they can do for you, and really the different types of services that different advisors provide. For some, it's an all-encompassing investment and financial management approach. Some focus really just closely on investment management or, one area of financial planning like college or estate planning. And asking those questions of a professional is really important as you assess whether or not you need one in your life. If you are making that type of assessment right now, and you're trying to figure out what exactly can a financial advisor do for me in 2025 as I assess my retirement readiness, give the folks at Armstrong Advisory Group a call. You can request this guide. It's the last day of the month, so last chance to get it. The number's 800-393-4001. Like I said, last day to request the guide. You can go to armstrongadvisory.com and request a download there as well. But the phone number to talk to somebody here, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece in the Wall Street Journal. Everyone is a gold bug now. So here's the thing.
I mean, everyone was a tech bug when tech bug was reaching brand new all-time highs, right?
Well, I mean, gold always... Here's the thing about gold, and I have this conversation quite a lot. It has short periods of dramatic outperformance relative to stocks, punctuated by long periods of combination boredom and massive underperformance. And the reason why is very simple. Gold is not accretive. It doesn't produce anything. It sits there. It does not generate any earnings. And so the periods where it does very well are periods generally where there is the threat or reality of high inflation while it's going on, or the worry about inflation that may be yet to come, but is not always. And so, quite honestly, what you end up with, and look, I have no idea where the price of gold is going to go. I don't know if it's going to be higher, lower, sideways, up, down, no clue at all. But here's the thing. Most of the money that's made in gold is made holding it for very short periods of time, and other than that, it does absolutely nothing for you. And investors, for some reason, want to treat gold the exact opposite way that they treat stocks, where stocks, despite all of the research suggesting, hey, you're better off holding these for the long term, people love to trade in out. They're like, ooh, I'm a day trader. Let me go in and out of these stocks. I'm going to buy some of these, sell some of those. Ooh, look what I did to my portfolio. It's upside down, inverted. That's what people do with stocks. With gold, people are like, no, this is for when the world ends. I'm never selling it.
Which is fine if that's your perspective, but understand the actual performance of it. And then also, if you're buying it for the end of the world,
you probably don't want it in your investment portfolio.
Right. That's the piece I always get confused about.
You know, like, the world has ended, and one man calls up his broker to ask if he can convert his ETF into actual gold.
No, all those companies are bankrupt.
Like, what? You know, so, like, I don't know. Like, your mileage may vary on all this, but personally, I think that when the apocalypse does come, the big brokerage houses probably don't answer the phone then, because the phone lines are down and everyone's dead.
That's not why everybody buys gold. But you do hear it a lot, and so
you do hear it a lot.
Like, we're not making this up. We get this a lot.
No,
and yeah, like preparing for the end of the world scenarios by making tweaks to your investment account.
No, I want animals and land and high ground. You know, like that's what I want for the end of the world. Not, hey, check out my portfolio on this app. I don't know. Again, your mileage may vary. It is what it is. Everyone's got their own ways of doing things, but I'm just, you know, kind of trying to logically think through the end of the world, which is not really a thing worth pondering. Like, if it happens, okay, like, whatever. Everything we know is gone then. So, in any case, gold, very popular these days because it's at all-time high prices, and so everyone starts to get interested. We'll see where it goes. I don't know, again, where this thing goes from here, but everyone's getting interested. Now it's getting some heat in the Wall Street Journal, which normally doesn't talk about things like gold very often.
No.
Let's take a quick break. When we come back, we've got a little bit of stack roulette right after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
Mike, what do you got for Stack Roulette today?
I got taxes. We haven't been talking a lot about taxes because there's been one or two other things going on. But Congress is back in session, and they're supposed to be taking up this issue this week. And there's also seemingly no agreement whatsoever between House Republicans and Senate Republicans on what to do here. The latest I heard is that they're going to be drafting on taxes.
Yes.
They're going to be drafting their own budget reconciliation bills separately rather than talking together and working together and then somehow mash them all together, is from what I understand. But we're getting some, look into what the tax on tips scenario could look like. There are two different proposals out there, one from Senator Ted Cruz, another from the proposal is from the two of them combined, from Senator Ted Cruz and Representative Vern Buchanan. Effectively, they would let many restaurant and casino workers claim a deduction on tips that they received. They must be W-2 employees of restaurant and casinos, and they would also limit the tax break to a $25,000 income tax deduction. So practically what this means is, unfortunately, my grand scheme of restructuring investment advisory revenue and financial planner revenue as a mandatory 50% gratuity is not going to get me anywhere in terms of a big tax savings. It's also not going to benefit some of the most commonly tipped workers out there, such as Uber and Lyft and DoorDash drivers, because this specifically limits this deduction to employees rather than independent contractors. I have no idea if this will actually make it into the final bill, but again, one of the first views that I've seen into one of the big rallying cries of the Trump campaign in 2024 around the taxes on tips. And so looks like that's where it might be headed if it actually makes it into a final bill.
Apple readying its biggest push into health yet with its new AI doctor. Dr. Apple, I presume.
Yes. Well, you know what they say, an apple a day.
That is what they say. And so apparently this is a big undertaking for them. And so here's the thing that's interesting about this, just from an investment perspective. if you look at one place where there's been a pretty consistent long-term trend towards more spending, it's been in healthcare. Healthcare spending as a percentage of GDP has grown very consistently over the last 20 or 30 years. Some of that is because we're getting older, and so we require more healthcare as we get older. That makes sense. Some of it is because of legislation that has either made it easier to or required more people to participate in the healthcare system. Okay, that's creating more healthcare spending. So you can see the attraction as to why Apple may want to get into healthcare. It's the idea that, hey, there's a lot of spending that's going there. It's a growing piece of the overall spending pie. And sure, why wouldn't you want to participate in that? The question is going to be, hey, like, can you actually make this work given your first forays into artificial intelligence that have been
lackluster,
not good at even reading messages and or news, and now you're going to try to give me health tips,
right?
Or, like, again, be my doctor. And so I'll quote here. The initiative is called Project Mulberry. It sounds lovely. And it involves a completely revamped health app plus a health coach. The service will be powered by a new AI agent that would replicate, or at least to some extent, a real doctor. The idea is this. The health app will continue to collect data from your devices, and then the AI coach will use that information to offer tailor-made recommendations about ways to improve health. And a few things on this that I find problematic. The first is, again, Apple has not yet proven that they can actually execute AI particularly well.
Agreed.
The second part is, are either of you familiar with Brian Johnson, I think is his name? The longevity dude who's all over the internet? He's the guy who's trying to live to like 150 years old by taking 800 supplements a day and replacing his blood every couple days and all kinds of stuff.
Okay.
And we're getting to the point where I really think, and this is not a cry for help, so don't think it is, but we're getting to the point where I think people are prioritizing longevity over actually living their life. In that, you see all these things about, oh, you should do this each day and this and this and this and this. And it gets to the point where you're just not actually a human being, but you're just trying to satisfy a bunch of requirements in order to maybe live longer, even though you don't really like your life, because now you're doing all of this stuff for 6 hours a day that you don't enjoy. And this is part of the reason why I don't own a smartwatch is I just think that we are too connected already and too focused on trying to satisfy all of these numbers that are supposed to make our lives better. And I'm not really sure they do when we get into this stuff.
Can I voice my hopes for this? I would actually really believe that by wearing a device 24 hours a day that monitors things like your heart rhythm and presumably a lot more things in the future, I would think would be pretty good at detecting, for instance, risk signs of heart attack and all sorts of different problems much earlier on. If there was some way to actually, take the data from the Apple Watch and match it up with your personal medical record, which does not seem like it's happening in any meaningful way or substantial way right now. If all we're talking about is an AI doctor that tells me to walk a little bit more, that's not going to help anyone with anything. But I would actually I could really buy the idea that, hey, if I wore this thing 24 hours a day and millions of other people were too, and doctors were able to use AI to comb through that data and look for patterns, we'd probably find some.
But this is like food tracking will be a big part of it.
Yeah, this is useless.
So, you want me to just put all my meals in and you're going to become
Yeah, this is useless. But I'm optimistic for how AI can play a role.
Taking a quick break for the entire rest of the day. We will see you tomorrow on The Financial Exchange.